to introduce the third panel. We call this panel the Expert Eye. So if you can appear out of the darkness. Bod Buck is the head of UK Primary Markets, North London Stock Exchange, Capital Markets, SLEG. Got no time for anything else, but just read out your job title, Bod. David Walters, Digital Investment Manager, MSIF. Piers Dryden, who I'm going to come to last, partner at Bradner's, and last but not least, Hannah Forbes, founder and consultant at the FundingCrowd. Bod, I'm going to start with you, actually. I was looking at the headline in the Manchester Evening News, which actually spelt the word finance wrong. Don't know if you noticed that. But it said, finance whiz kid Bod Buckby joins London Stock Exchange from Rothschild. How old do you have to be a whiz kid, Bod? Because I don't want to cast aspersions on you with all the books in the background, but you're not 15, are you?
Thanks, Chris. Yeah, I don't think they actually use the word kid if you look at that. But given some of the things I've been called over the years, I'll take that one as a compliment.
You're spot on, incidentally. I read the word whiz and picked the word kid afterwards. So it was just said finance whiz, Bod Buckby. Okay, so before we talk about your current role, let's look a bit at your career, because you're a deal maker of some repute. You're behind AO's decision to float as well, or you're heavily involved in that. Just tell us a bit about yourself, Bod.
Yeah, look, so I was working in 2010 in Rothschild's newly formed at that point IPO team, helping companies to come to the capital markets. And I really felt that there was an opportunity to advise companies back up in the Northwest where I was from. And so brought my IPO toolkit up to the Northwest to see if there were companies that would be interested in hiring local advisors to help them access the public markets in London. And I think the first two companies that I went to see were the Hut Group and AO.com, and it went from there. So there really are some fantastic businesses up here that have made some of the biggest IPOs over the years. And I think, what stood out at both of those businesses was really the quality of the management teams, the vision of the founders. Exactly some of the points that Matt picked up on earlier. They had a really very well articulated view of the addressable market and how they were going to use technology to disrupt that and build something really very special.
I'm just looking at a question we were sent actually just between the second and the third panel, but I think it's relevant to you, Andy. Sorry, I think it's relevant to you, Bod. It's from Andy Pearson. It said, how do you create a successful small company? And you mentioned earlier the importance of the management team. I suppose it doesn't matter what size you are. You want to create a successful company, the management team is critical.
Yeah, I can answer that. I mean, I think that there's a variety of skills, and I think what we hear from business leaders who have set up their businesses, founded their businesses from the very start, is that there are new skills that you have to add to your armory, if you like, as you build. So I think the first and foremost has got to be a very, very clear vision of what it is you're trying to achieve as a business, and that's about the markets, but it's also about the purpose. In what way is your business trying to change the world? Because that is what is going to give your business culture. It's going to be what galvanizes your employees to really put in as much drive as you will do as a founder. And then it's about then sort of surrounding yourself, I think, with the right sources of help and inspiration and guidance as a founder to learn the new skills of attracting finance, of scaling a business, of taking it from pre-revenue to 5 million to 20 million to 1 billion. And you can only do that, I think, with the right people around you.
My former friend James Bedford asked, what would help tech companies in Liverpool raise their first round? More investors, or more investors, or better investment readiness training, or better deal flow?
Look, I think that first round is something that we are very conscious is a major step for private businesses, and yeah, I spend my whole time working with private businesses who are at some stage along that funding journey. I think a lot of it comes down, from our perspective, to understanding really what the different options are. There really is a huge plethora of different options now, from angel investors to VC money to family office money. How do you go about assessing all of these different options? And what we've done as an exchange is build a business called Elite, which works with private businesses exclusively to help them assess these options, and we've seen huge appetite for that and demand. And what we're conscious of is that we've always got a responsibility, I think, as an exchange, to help companies along those private initial rounds before they're then ready to think about the public market.
Can I ask you a couple of questions? It's amazing how quickly time goes when you're having fun. Is there much appetite from companies for investment at the moment? And conversely, are the equity capital markets open for investment?
Yeah, look, in the immediate aftermath of the onset of the pandemic, investors were very much focused on supporting existing quoted companies, but that was already investors were moving on from that over the summer. So we've seen now 28 IPOs this year, of which 25 have happened since the onset of the pandemic. So investment is really flowing very strongly. Investors want to back businesses that are helping the transition to a more digital and a more carbon neutral economy. And those businesses are equally really keen to come to the market, and we're seeing a really strong pipeline at the moment.
Okay, you're excellent, Bod, as always. I'm going to sort you out with a Carl Wong t-shirt, which Max is going to sort out on a crowdfund, and I think it's going to take off, which brings me neatly on to Hannah Forbes. Hannah Forbes, founder and consultant at the FundingCrowd. In the last 6 months, FundingCrowd has raised over £4 million. Just tell us what you do, Hannah.
Yeah, sure. So the FundingCrowd helps people raise money on equity and rewards-based crowdfunding sites. So that's Seedrs and Crowdcube, but also Kickstarter and Indiegogo and those sites as well.
I was looking at your website and I thought it's really interesting, actually, because you see most websites are talking about how amazing they are. And you were talking about the fact that when it comes to crowdfunding, 64% of crowdfunding campaigns fail. Do most crowdfunding campaigns, do they fail because of a lack of preparation? Is that the reason why?
Yeah, definitely. So there's this big common misconception that, and crowdfunding sites don't really help this conception either, that you can go on these platforms and the money will kind of come in. But that's definitely not the case at all. You're actually really bringing a lot of your own crowd and your own network, and this is what Matt talked about earlier as well. And you're unlocking investment that already exists and there's already an appetite, as opposed to expecting the platforms to bring organic traffic to you. So if you don't have that network, if you're not warming up that network and bringing people to your campaign, then you're not going to raise the funding you need.
So you have to almost approach it as you would if you were pitching to an investor in the flesh, in terms of making sure you've got a really good product, making sure you've got returning revenue, making sure you've got a good management team as well. You've got to do your homework as well.
Yeah, absolutely. And I think crowdfunding definitely originally emerged as an alternative to angel and VC, but really now it's more complementary to those funding methods. And you use crowdfunding if you want to entice more customers, get some PR, unlock investment that's already there for you. But not many people now actually use it completely as an alternative. You use it alongside those two other investment methods.
James Bedford asked, should crowdfunding be used primarily for marketing or investment?
So for rewards-based crowdfunding like Kickstarter, I would say primarily for marketing. There are actually big campaigns on Kickstarter and Indiegogo that are loss-making because they just use it as a product launch platform. So if you want to get a big profit margin on rewards-based crowdfunding, it's not really the right place for you. For equity-based crowdfunding, I definitely say it's used for funding just as much as it's used for marketing, but you really have to see the benefit in raising very publicly. And you have to already have kind of marketing collateral and marketing activities in place to really benefit from crowdfunding.
When we're doing our research, you said to me, Chris, you said, ask me any question you want. You won't cause any offence at all. So I'm going to ask you two questions. I'm going to put that to the test, actually. The first one is crowdfunding safe? And the second question is, the perception I've always had is that people go to crowdfunding when the banks say no. Is that an unfair perception?
So in answer to your first question, is crowdfunding safe? Equity crowdfunding is absolutely a regulated activity in the UK. We're the global leader in terms of regulation for crowdfunding. So in terms of it being a legitimate and safe way to raise funding, absolutely yes. However, there are some aspects that should be approached with trepidation. From an investor perspective, it's definitely a high risk investment, and you'll see whenever you see a Seeders or Crowdcube campaign, they always advertise with capital at risk, and that's something that you need to do as a founder. Also, you are raising very publicly. Your pitch deck can be downloaded by absolutely everyone, and you don't have control, so competitors can download your pitch deck. So if you have any important IP that relates to the investment opportunity and really helps demonstrate the investment opportunity, then you can't really crowdfund because it's very public. In answer to your second question, is it an option for people that can't get money from the bank? No, absolutely not. I think that perception has drastically changed for a number of reasons. Firstly, because we've seen some incredible crowdfunding campaigns. So Monzo, Brewdog, really exciting, amazing businesses in the UK use crowdfunding. So I think that's helped dispel that idea of crowdfunding, but also because crowdfunding is now a really competitive space. As I said, you really want to know that you're using crowdfunding because it's worthwhile, because of the extra attention that you'll get, because you want to have this element of community ownership within your business. And because of that, it's really competitive on these platforms. On Crowdcube and Seeders, you have to be bringing some pre-committed investment. You have to show you have a big network. And so it's not really a path that anyone can take lightly. And as a consequence, it's definitely not worth it if you can get investment elsewhere.
I'm just looking at a question we've had from, I've only got the email address, info@bopura.com. Can crowdfunding damage a brand?
Yes, definitely. As I say, if you don't prepare and you just go live and you expect the money to come, you will sit on these platforms showing that no one has invested in you for potentially up to 30 days, which is never a good look. I would say if you prepare properly and you manage the target that you're raising for and you're not over ambitious, then there's definitely ways to mitigate that risk. And that's definitely what I work to do with my clients, to ensure that they're managing risk. They have real visibility of the investment that they're going to get. So when they do launch, it's done really well, and they secure investment very sustainably. But yeah, if you don't prepare, it definitely can be damaging.
Yeah, we're going to have to be careful about Carl Wong's T-shirt now. We don't want it sitting there for 30 days and no help. And Max Sado asks, for a globally focused product, how do you pitch that opportunity to international investors when you are a small company used to other means of funding development? You need to understand from those who have done it. Yeah, I mean, how do you get to play with the big boys and girls? You know, if you're a relatively small company, I think is the way I'd paraphrase that question, Hannah. So on crowdfunding sites, I would say you have an advantage because you're alongside big businesses. So you're raising alongside companies like Free Trade and Mintos, who recently have raised kind of over 7 million. So you're definitely set alongside these great businesses. So you're on a place that is attracting large investors for sure. And then when it comes to really attracting companies, I would say you have the same chance to do that through crowdfunding than through angel and VC. And the same things are what investors are looking for, which is proof that you're solving a problem, and proof that solving that problem represents a lucrative market. And if you can do that and you can prove that, then just through any other form of crowdfunding, you can, any other form of investment, you can accept big investments through crowdfunding. Just one final question, Hannah, from you, because we've had so many questions. I think people are interested in crowdfunding. They've heard it. They don't necessarily know what it means. Matt Latham spoke about Kickstarter and Seeders and the merger between the two of them as well. What do you think 2021's got in store in terms of crowdfunding?
I think it will be a really interesting year for crowdfunding, as well as work to help businesses raise. I also do research on crowdfunding with my team at Cambridge University, and we're absolutely so excited and fascinated about this year. And so yes, there's a Crowdcube and Seeders merger, which is expected to kind of complete around April, and that's massive. That represents basically 80% of the UK equity crowdfunding market. And with UK being a leader in equity crowdfunding, it's big for crowdfunding as a whole. So I think that's very exciting. We talked a lot, and Matt mentioned this, that crowdfunding has really excelled in this time, while other startup funding methods hasn't. And that's really clear. So while some investment, VC, etc., have reduced by as much as 80%, crowdfunding has continued to grow and continue to excel. And the model emerged from 2008. So I really think that the model in the UK is going to excel and grow. And I think more people are going to turn to crowdfunding. And overall, I think it's a really exciting time to be in the industry.
Hannah, great. Really enjoyed it. I found that really fascinating. I think it's really important as well to get somebody who can talk about crowdfunding in a language that people can understand. Thank you for that. David Walters, Digital Investment Manager, MSIF. I was looking at MSIF's website, and you've supported 2,000 businesses, invested £163 million and created 14,770 jobs. For those of the people in the audience who don't know, just tell us what what you do.
Sure. Hi, Chris. Hi, everyone. Yeah, so MSIF stands for Merseyside Special Investment Fund. We are 25 years old last year. It was our anniversary, and we're based in the city centre. I think we're one of the only investment houses within the city centre. We're in Exchange Flags. There's about 15 investors working within MSIF, and we have. I suppose we have a sort of funding pathway across all of our funds. So if you tot up all of the funds that we've got, there's about 15 different funds that we try and deploy across the region, and that kind of range that sort of ranges from kind of debt funds, loan funds, venture equity, pure equity. We try and do a lot of co-investment with other investment houses, not just within the region, but across the UK. But I think if you were to sort of describe what we do, we are very geographic specific. We look to back businesses that are within the Liverpool City region, a little bit wider now. We've kind of extended that geography up into kind of Cheshire and Greater Manchester a little bit. But we look to kind of back great teams and businesses that are looking to grow within the city region. We're not just about sort of returning funds. We are about creating jobs and sort of inward investment as well. Sorry, Chris. Cool.
No, sorry. No, I was going to ask you two quick questions, but we've been asked one again from the anonymous attendee. I need to find out who this person is. But do you think Liverpool City Region has a tech speciality? We were talking, well, we heard from Clemens earlier, and he's talking about the gaming industry, which really, set Liverpool apart, back in the day. Do you think the region's got a tech speciality now?
Good question. I think the sort of creative sector is particularly within the city centre, rather than kind of moving out towards kind of Daresbury and places. But I think the kind of creative sector is very city specific. Kind of businesses that are developing AR and interactive functionality. There's clearly something there which is very Liverpool specific, and often these sort of ecosystems that kind of develop out of the university courses develop that speciality. If you look at Dundee, for example, they've got a fantastic gaming ecosystem because of the qualifications that you get out of Dundee University, and I think that's the same in Liverpool. That kind of immersive course. University courses have kind of created that kind of immersive speciality. But there's 3 hospitals. There's a kind of health tech speciality. I think there's very definitely a kind of ed tech speciality as well. But I don't think when people talk about kind of Liverpool or the LCR, there is a well communicated speciality around tech. You kind of look at Manchester, and there's very much a kind of fintech speciality in Manchester. Newcastle, it's very kind of data speciality. I don't think we quite established what that speciality is within the LCR yet, and I don't even think that kind of creative tech is seen as a kind of speciality. It's almost a kind of sub speciality, and I think we've got a lot of work to do there.
We've heard from some investors at the moment, and some companies who spoke about the fact that during COVID, a lot of investors were very inward facing and were looking at servicing the needs of their own portfolio. Are companies finding it easier now to get investment? I mean, if I looked at what's landed on your desk this week, David, is there that appetite for companies wanting investment, and is there the appetite from people like MSIF to invest?
Yeah, I mean, you know, when the pandemic hit, you know, like a lot of investment houses, we kind of scratched our heads and thought, you know, what's our strategy for the next couple of months? And it was very much about supporting our portfolio companies as much as we possibly could with funds. And we also started getting involved in all of the kind of new Sybils and bounce back facilities as well, which we administer some of that. But I think when we kind of settled down a little bit and took stock, we wanted to get back onto that kind of investment in tech trajectory that we'd established. And you know, we brought in some new people into the company, myself included, new chief executive, people who had run TMT funds, and you know, we very definitely wanted to turn the attention of MSIF into tech. And as Alan said earlier, I think the opportunity to support the new normal, for, you know, hate that term too, with D2C capability, with digital solutions and platforms, means that it's a very interesting and attractive area to invest in. So our pipeline now of investment opportunities is bigger than it's ever been. It really is. You know, we've got about 50 tech businesses on our pipeline that we're super keen to you know, find the right ones to back.
Yeah. Which is the reason, of course, that MSIF is behind the Tech Climbers 2021 list. I'm going to give a name check to all the sponsors as well, including you yourself. One quick final question. Keep your answer nice and short, because I want to come to Piers Dryden in a second from Brabner's. In terms of what are the check sizes that would you normally sort of sign off on at MSIF?
Relatively wide, so you know, a kind of average sweet spots around about 1.2 million, I'd say. But you know, we kind of range between 250 up to 2 million. And as I said, we do a fair amount of kind of co-investment as well. So, but I think our sweet spots around about 1 million, Chris.
Okay. No, thanks very much, David. Excellent as always. Piers, this is like a relay of 10 races. And you are the person who's bringing it home. You're bringing the baton home, Piers. So no pressure on you at all. You've got a big interest in technology. I know that, Piers, because we've spoken at events before. What's your take on Liverpool City Region's tech sector, in your opinion?
Yeah, thanks, Chris. I mean, at Brabner's, you know, we've got a dedicated tech sector group. We've got core focuses. And in Liverpool, our investments team sits. And we have a sort of tech funding practice there. I mean, I think the Liverpool City region has a pretty vibrant tech sector. I mean, you know, we've heard from some great businesses today already. And obviously we've heard from David and MSIF looking to back tech businesses in the region. So, you know, my view of it is that there are some really good core hubs and capabilities in and around material science and healthcare, research, high performance computing, which has been mentioned, and they all provide focuses for tech businesses and sort of spin-off technologies and work streams, and also gaming, of course. I mean, I do think I would agree that there are challenges as well. Securing the same access to expertise, shared knowledge, facilities, markets, capital, compared to some of the other UK regions. And there is a bit of a sort of a risk of a kind of a self-affirming liability of distance, if you like. So there's a lack of all of the experience and facilities and capital in the region, which prevents more of that being attracted to strengthen the ecosystem. But I would say that, and it's clear from what the local authorities put out as well, and also the presence of everyone on the call today and Tech Climbers and everything, that there's a real appetite to continue to evolve the ecosystem. And it's one that we're very excited about as a firm. And, you know, we've got great clients in the region who are doing good things and securing investments. So I think it's a very positive place to be.
How do the startups in Liverpool, of which there are lots, scale up? How do we get a more mature tech sector?
Yeah, so I mean, on that one, I would agree, and we're involved quite heavily in the accelerator that was mentioned earlier, which Carl mentioned and others. You know, it's about, I think it's about networks, and it's not lack of ability. It's just a lack of connecting the right people together, the right professional services advisors at the right time, the right support for the startups to get to the point where they're scaling. Obviously, investment is important, but investment doesn't have to come locally. I think it can, and we'll touch on that in a minute, I think. But you know, it's connecting the right people, supporting, and getting mentors in as well. You know, people who have been there and done it and can share lessons that they've learned. It's something that we hear most frequently when we're talking to businesses, you know, clients who are looking to move to the next level. It really helps them to be able to talk to those who have gone before and can give them some guidance.
Do you feel, Piers, that we've spoken a lot about COVID-19? Most of the people on this call, I'm guessing, are dialing in from home, looking at the backgrounds for sure. But do you think that not being around the same table as people in the tech sector, it stymies creativity and innovation in terms of, you know, I love calls like this, but it's not quite the same as a live event, you know, and could that hold back the tech sector?
I think you can see it. You can argue both sides, I think, of this one. And I know, you know, you and I spoke before, and it is something that's been pointed out that the lack of face-to-face contact, you know, could impinge on kind of people sparking off one another, because you don't get the same connection virtually. Having said that, I definitely think that there's more interaction and meetings, you know, than ever before. Probably more people get invited to meetings. And you get more of a kind of melting pot of capabilities and ideas because it's a virtual meeting and you don't have to physically get yourself to a location to hold the meeting. And I think that clearly the events of this year have thrown up a lot of challenges which have required and necessitated innovative responses. So you do get that. I also read that idleness is the mother of creativity in some ways, and you know, perhaps there are times when we're locked in our houses with a little bit of downtime, and an idea may come to us. So I think it's a difficult one to come down firmly one side or the other. Certainly with disruption comes opportunity for innovation and to challenge the norm, and certainly we've seen all of that happening this year.
If idleness spawns creativity, then I can't wait to see what my two daughters have been doing for the last 9 months as well. I mean, is there a feeling, or that there is a feeling, that you have to leave Liverpool to go to London for investment? I mean, Piers, is that your assessment?
Well, I would agree with the outlook that thinking broader is a good idea. You know, if you've got a good business, you've got a good business. I would actually argue that, you know, there's it's not necessarily going to London, but, you know, thinking with a broader outlook, perhaps internationally, is a good idea. You know, we've got plenty of clients who secure investment from the US, for example, through their networks. I think it's more important. I think it's more important to make sure that you're able to reach the right people, and if the right people to invest in your business are in Liverpool City Region, then that's perfect. If the right people to invest in your business are based outside the UK, then that's also useful and important to take it from that perspective. I mean, you know, businesses need, you know, look for investment to grow and scale, but it's not just the money that they need, it's also the expertise of the investors who can come in and help. So actually, it's not just any investor who makes sense, or just because they're local, or just because they're in London. It's wherever they may be located. How can the investors' participation in your business support your aspirations, you know, not just with money, but also with connections and expertise and everything like that. So yes, I think some of those people are located in London, and face-to-face contact is helpful, but I absolutely don't think it precludes businesses from securing money wherever it may come from, just because we're not in London.
I've got two quick questions. I'm going to come to you, Piers, in a second. David, I'm going to ask you the first one, if I may, and then I'm going to wrap up. Phil McGuinness asks, what do the panelists think is the best route to market for funding for emerging early stage markets, emerging tech effectively? You can keep your answer to a simple sentence, David. Is there a best option, would you say?
Yeah, I think the angel network is really effective. I think there's a lot of There's a lot of grant stuff around as well at the minute as well. So Innovate UK is incredibly useful early stage funding. But please come and talk to us at MSIF as well, of course.
We just heard about Supply World getting a grant of 100,000 from Innovate UK.
Yeah.
And Piers, I mean, the anonymous attendee asks, I'm going to paraphrase the question slightly. He says, do you think the requirement around having a business plan makes it harder for startups to raise funding in LCR? I mean, obviously, anybody raising funding is going to need a solid, robust business plan as well. Is there anything that makes it more difficult in LCR in your view, Piers? And what would your advice be to somebody who's trying to raise that first round in LCR?
I don't think it's specific to LCR having a business plan or not. I mean, I think that investors who come in at a very, very early stage are looking for certain key things. They want to know that there is a plan, that there is you know, that the business understands how it's going to acquire its customers and how it's going to monetize them. You know, if it's very early stage or pre-revenue, you know, how's that going to happen? If it's later stage, it's all about being able to prove a customer base and how that can be developed and evolved. I wouldn't think I wouldn't say, and I haven't got experience of, I haven't seen it that LCR specifically, it's easier or harder having a business plan or not.
Thanks, Piers. We're going to get the answer to the second poll question. Do Liverpool's tech firms need to think globally? So let's see what the answer was. The two choices were yes or no. Do Liverpool tech firms need to think globally? And the answer is yes or no. 97% said yes. So the person who said no needs to identify themselves. I think it might have been the anonymous attendee because nobody knows who he or she is. But no, really fascinating, and actually no sitting on the fence there at all. I do need to thank the sponsors for today's event, without whom this couldn't have happened. So thanks to Bradman's, to Growth Fund, to Gather, to Zoot, Invest, Liverpool City Region's Combined Authority as well. And thanks very much to the people behind the scenes who are working, Helen and Frankie, you know, to make sure this event's been pulled together as well, and also to Anna. 2 dates for your diary. Last date you can nominate for the Tech Climbers List 2021 is the 14th of December. If you want to find out how to contact, all the details are on the website as well. It's going to be a fantastic event actually, and a fantastic list which is going to be published by Business Cloud. And the final event is January the 28th, 2021, which is the when we reveal the big reveal for the LCR Tech Climbers List 2021 will be revealed. And congratulations to everyone for getting this far in the year. There's so much negativity, and understandable negativity as well. I think it's when you come to events like this, you hear a different side of the story, and you hear so much positivity, and there is so many good things happening. Thanks very much to all our speakers today. And it finally just remains for me to wish you a happy Christmas, a prosperous, and more importantly, a healthy new year. Take care.